Man, I'm so sad. I'm so sad. JP Morgan, they told us that this week's, stocks were going to go up 7%, but it looks like more than likely, stocks are going to go down 7% based upon what I'm looking at. Okay, yesterday the market was all red. There's Red Dead Redemption out there. Today, very red as well. And by the way, NASDAQ ended up finishing 3% negative. I took the screenshot about a half hour or so before the market actually closed. So yeah, everything was down here today. Russell was down, I believe, 2% plus, S&P same, and NASDAQ was down about 3% here today. So yeah, a lot to talk about in today's video, guys. A lot I want to show you, a lot about what's going on out there. I literally think, as of right now, we're on pace. Literally, we're on pace for the market to drop 7% this week. It's like, can't make this stuff up, man. They were telling us the market was going to be up 7%, okay? Yeah, predictions, short-term predictions, aren't they fun? Big tech. So look at big tech here today. It's just devastating. Everything's red. Literally everything's red for when it comes to big tech. Shopify leading the bunch. It seems like Shopify always leads this list, does it not? If it's on the upside, Shopify leads it. If it's on the downside, Shopify leads it. It's like whatever the market's doing, that one's going to take you there, okay? AMD down big today. Usually that one is kind of like middle of the pack, so to see that one, the second biggest loser of big tech today, is pretty interesting. About 6% move there today. PayPal down huge. I might have bought some PayPal today. I might have also bought some Meta. I might have bought some Amazon today. Might have bought some Chef. Might have bought some Corsair. Might have bought some Honest here today. Nvidia might have. I don't know. Maybe. Nvidia was down about 5% here today. Amazon down about 5%. And good old Tesla, my ass flirting with going under 700. And a matter of fact, I think by the close, I think Tesla finished under 700 if I recall. Because like I said, I took the screenshot just a bit before the market closed. Coinbase is a stock that's now down almost 80%. Now, I've heard some people ask me recently about Coinbase, and could I see this company having a similar fate to some of the other crypto companies out there where they become insolvent, right? And they either have to face bankruptcy or they're like a penny stock or something like that, okay? So let me be very clear when it comes to Coinbase. Everything's a possibility, right? As all things in the market, like everything's a possibility. No different than this week. The market could have went up 7%, it could have went down 7%, it could have done nothing, right? But with that being said, despite everything being a possibility, I don't think it's super realistic for Coinbase to drop to penny stock level. And here's why, okay? Coinbase is cash loaded. They had their big IPO this past year. This was as their last quarter. They had over $6 billion of cash, okay? As of today, the market capitalization of Coinbase is about 11 billion or so. Somewhere around there roughly. And so this stock could drop in half. It would be down to its cash level. That sounds about right. So for Coinbase to drop to penny stock level, I think it's fairly unrealistic. Like I said, everything's a possibility. If Bitcoin was to go to, 3K or something like that, you never know. It's just when you're cash loaded like that, it's a different situation. Whereas a lot of these other companies got in trouble is they were highly leveraged. They were not cash loaded, and so some of these other companies got themselves into trouble. Companies like Robinhood, cash loaded, okay? And I know Robinhood gets a lot of hate all the time, but at the end of the day, Robinhood's going to be just fine. They'll be just fine through this crypto crash in terms of, the company's not going to become insolvent or something like that because they got $6 billion of cash. Same thing with Coinbase. They have $6 billion of cash. So, companies like that, although this hurts their business bad. A stock market crash and a crypto crash hurts their business dramatically because there's way less people trading. A lot of people leave the market completely. A lot of people have completely obviously left the stock market over the past 12 to 18 months, and a ton of people are leaving the crypto market in mass right now. So that's going to hurt their businesses, no doubt. Their numbers are going to be very, I would call them bad for the next several quarters. But with that being said, there's a very big difference between a company that's cash loaded through the roof and has billions and billions and billions of dollars of cash just sitting around versus some of these other ones that just didn't have that sort of money, right? And we're doing some of the more dangerous plays. So there's just kind of something to keep in mind with those. In terms of the players that I see being around long term, I think Coin's going to be around long term. I think FTX is going to be around long term, and I think honestly Robinhood's going to be around long term in terms of companies that have business in the crypto space. Okay, housing stocks. When it comes to housing stocks, You can't, it's very hard to trust any rally in the stock market right now. When you're in a bear market, no one trusts any rally. But these are the ones you especially don't want to trust right now. Sometimes these housing stocks will go green on a green day, right? And you just can't trust any move in these housing stocks that's anything positive right now. Housing is in a horrible place for the next 12 to 24 months. There's no magic pill out of this situation. Housing is going to be in a horrible spot for a while here. And so anytime you see these stocks green, it's like destined to go down more, essentially, for these type of stocks. There's nothing to be excited about for housing, like I said, for at least 12 to 24 months. And is it possible that the entire stock market could start to rally and housing stocks could lag big time? Absolutely. Absolutely, that's a real possibility, that the market rallied and housing stocks are left behind, because housing is not going to be in a good place until we get mortgage rates back down to, realistic levels that people are used to, which is 2, 3, 4%. Yeah, on a 30-year, the housing market's not going to be good for a while, man. And we're 6% plus right now. And if we're talking 7% by the end of the summer, like, real estate has no chance, like literally no chance. And I'm watching it play out in real time. The real-time data I look at is, okay, no bueno for real estate. And it's just going to get worse and worse and worse for at least the rest of this year, but likely 23 is going to be an ugly year for the real estate market. It's very simple. If you want to know if the market's green or red on a given day, pretty much all you need to do is just you can replicate my oil and gas stocks list. Literally click on that and you'll know if your stocks are green or red that day, essentially. And the reason being is this is how simple it's been in the stock market recently. Oil and gas stocks up, rest of the market down. Oil and gas stocks down, rest of the market up. Like literally almost on an everyday basis. That's the way it plays out. And today it's no different. Almost everything in the market is red today. And their oil and gas stocks are just, being a beast, looking great. In the short term, that is. These stocks don't do good long term. Well, that's something we factually do know. They go through these cycles where, for 6 to 24 months, depending upon the cycle, they're hot, right? And everybody wants to get in these type of plays. But, that fades very, very quickly, and next thing you know, red. And that's oil and gas, man. It's commoditized industry. It's just the way it is. Speaking about commodities, I don't like seeing what I saw today between natural gas up, oil up, wheat was up, corn was up, lumber was up, oats was up. The only good thing about lumber and oats is a very small amount up here today, right? Commodities, we need these babies to continue to go down if we want to pull inflation down. Fintech, ugly today. Look at Firm, 9.5% down move today. Coinbase, we already spoke about that one, 8.5%. Upstart, 7% plus. SoFi, back to 550. It's crazy because I remember SoFi before their latest earnings, they were around the 550 range. Then they had what I thought was very impressive numbers. Stock spiked up, and came back very strong. And then now it's just faded. It's faded all the way back to 550 again. Square's now down to $65 for Square. Holy smoke, is that no joke? PayPal back down to right around 52-week low. And the hood's back down to $8 after yesterday. Obviously, there was there was a news about FTX might try to make a move there, and we'll see about that. Sam kind of shot it down, but he kind of didn't shoot it down. Like, if you know how to kind of read between the lines, what he said was factual, but at the same time, he didn't necessarily deny the part that they could at least be having internal discussions about making a move there. So that is something important to just kind of keep in mind when it comes to that, okay? Now, this is my watch list that I have of stocks that are down at least 65% from their highs. And, look at how much these stocks are getting hit today. Everything from like a 12% move to the Planet, I guess, is going to try to do a break-even type thing today. But yeah, all these stocks here are down 65% plus from their highs. And many of these stocks you're looking at are down, 75% plus from their highs, essentially. Just some absolutely massive movers down, and just vicious on a day like today, right? FedEx. I listened to a FedEx conference call last night, and, this is a stock that's done nothing for the last 5 years. Stock is up 10% in the last 5 years for FedEx, one of the best companies in the world. They've been through a lot over the past 5 years, I can tell you that, and some good things, some bad things. But FedEx, I got to say, is a pretty interesting dividend stock. Obviously, a stable business model, if you can, call it stable. 2% yielder on this one, and I don't know, might be a potential add in my dividend account eventually here. So it's something I'm definitely contemplating there. I like their conference call. ARK Invest. Cathie Wood said Tuesday that the U.S. is already in an economic downturn. She admitted that she underestimated the severity and lasting power of inflation. Quote, "We think we are in a recession," Wood said to CNBC's Squawk Box on Tuesday. Quote, "We think a big problem out there is inventories. The increase, which I've seen, is I've never seen it this large in my career. And I've been around for about 45 years, she says." And to give Cathie Wood credit, I know obviously her stocks aren't doing well, and her stocks aren't going to do well in this sort of market. That's a risk-off market, right? But in terms of Cathie Wood, she has been right about inventory. She was calling that out as being a potential problem probably at least 9 months ago, but it might have been like a year ago, to be honest. So she definitely deserves respect because she was calling that out, that was going to be an issue way before, honestly, anybody was even speaking about that or talking about that, okay? She says, quote, "We were wrong on one thing, and that was inflation being sustained as it has been," Wood said. Quote, "Supply chain. Can't believe it's taking more than 2 years. And Russia's invasion of Ukraine, of course, we wouldn't have seen that. Inflation has been a bigger problem, but it is set up for deflation." And yeah, it definitely sets 23 up into a potential deflationary year. I mean, if you imagine this scenario plays out, okay, where in the back half of this year or going into 23, oil price starts coming down, natural gas starts coming down, right? Because we get a confirmed recession. And we know if we get a confirmed recession, more than likely, it almost always plays out this way. Oil and gas are coming down in a recession, okay? So that all of a sudden happens. Then simultaneously, you get all these other commodities to start to fall, right? And we've been in a boom cycle for commodities for a bit here, and we know that's not sustainable. So if you had that happen, plus companies have to lower price because you have to be more competitive because it's not a hot market, right? You can end up in deflation. And as crazy as it sounds, I don't think it's out of the realm of possibility for things like rents to potentially even go down in 23. I'm not going to place any bets on that, but I think a lot of these, I see a lot of new apartment complexes going up, a lot of multifamily, and I think there's going to be a lot of people moving in with other people if we do actually have a sustained recession. I think the housing market's going to continue to be very weak, and I think rents will have to come down because I think landlords are getting too greedy right now because they're looking and they're saying, "Oh, my house is now worth this much," or, and we've been in this kind of hot cycle. So now all of a sudden they think they can get those sorts of prices. And I think, as this year transpires and we go into 23, I think they're going to find out, oh crap, I can't get these prices. And the only way I'm going to pull tenants is I got to drop prices. And so I see that as actually something that's going to likely play out, and that's going to be interesting because I don't think anybody's even predicting that or seeing that happening, but I think that's going to ultimately happen. Or you're going to end up sitting with a property that's going to have no tenant in it for 6 months, 12 months, 18 months. And obviously as a landlord, you want to get somebody in there. And it doesn't matter if you own a single family home, or it doesn't matter if you own an apartment. You got to get somebody in there, right? And so, yeah, we'll see how all of that plays out. But, deflation, I think, is definitely a real possibility in 23, and that could blow everybody's mind because, then we're going to be talking about something we haven't really seen, which is deflation. Amazon limits how many Plan B pills you can buy as demand surges. I got to say, okay, I try taking one of those all the time. Every night I take one, and I keep having kids. I don't get it. I don't think it works. I'll be honest. It's like every other week I got a new kid, man. I'm practically running a daycare at this point. California plans to send millions of inflation relief payments up to $1,050. So, all right, man, such a pickle, right? Because if some folks are struggling out there, you kind of want to help out, so you want to send a stimulus payment, right? But there's two core reasons why we've ended up in such an inflation mess, okay? The first reason, obviously, is supply chains. Oh, man, I gotta pause this video and cough a little bit. So the first thing is, obviously, supply chain problems. But the second reason we ended up in this mess. And I think a lot of people don't want to admit this. But the second reason we ended up with this massive inflation is those stimulus, man. And a lot of people got stimulus that didn't need it, and they started buying all this stuff. And business boomed for a lot of folks, right? And so the real estate market got hot. And, everybody was buying everything left and right. And I'm going to show you something that's going to shock you in just a moment here. And so if you send all the stimulus money out, some people actually need it. And they need that money to pay for gas because they don't have the money to do that, or rent, or whatever it is, right? But a lot of folks that get the stimulus money don't really need it. So what do they end up going and doing with that money? They spend it. They go buy a new iPhone with that money. They go buy something on Amazon, right? They buy this, they buy that. And yeah, it helps out the economy, which is a good thing, right? But it can also cause more inflation, because if you just keep pushing up demand, prices end up going up. And so this is what you end up seeing play out right in front of your eyes. And this is why, you're kind of in a real pickle. And some people wonder if this is like if we're on the start of UBI. And I think Rona was the potential start of UBI, and just in different forms, and just kind of, slowly getting in things over time. This is Apple's revenue. There's absolutely no reason Apple's revenue should have jumped $105 billion in a 2-year span. Apple's revenue jumped like that because, quite simply, a lot of people got stimulus money and other things and PPP loans and all this stuff, right? That honestly didn't really need it. And those folks went out and spent that money and bought the new iPhone and bought the new iPad and bought a new pair of AirPods and all these things. Because if you get a $2,000 check, a $1,200 check, a $1,000 check, these sorts of things, right? Like I said, some people actually need that for base necessities, but a lot of folks just don't. And what do we know? If you give Americans a bunch of money, what do Americans do? Go spend the money. Very small amount actually invest the money, and some that do invest in speculative things, which obviously we've seen how all that's played out. But most people, what do they go and do with the money? They go and spend it. So they're like, oh, I got an extra $1,000 in my bank account, an extra $2,000. What can I go buy with it? And it's just kind of like burn a hole in their pocket, as they call it, right? And believe me, I saw it, in summer of 2020 and summer of 2021, how many people were coming out here to Vegas and just spending money like crazy, because they had the stimulus money. And, people can't wait to just spend that money when it's in their bank account, especially if you're not used to having much money in your bank account. A lot of folks see $1,000, $2,000 all of a sudden in there, and they feel good. They're ready to go and spend. Let's go to Vegas, baby. Let's do this. Let's do that. And that's just the way it is. And so with this whole California situation, if they're going to send out all that stimulus, some people actually need it, but a lot of people will get their hands on that don't really need it. And it's another potential that could cause inflation, right? And so, yeah, that should have never happened. Apple's revenue should have, best case scenario, been about flatline over those years. Should not have been up $105 billion. But you flood the market with money, Apple's going to do well. They got products that people want. And if people have an extra couple $1,000 in their bank account, they're going to consider the new pair of AirPods. They're going to consider a new iPhone. They're going to consider buying some apps. They're going to consider playing games on their phone and spending $5 on that game, $10 on that game, right? And buying all those in-app purchases and things like that. And Apple's just a direct beneficiary of that, right? Now, I want to speak to everybody about the state of the market, right? So basically, the stock market we're in a 12-round fight, okay? And kind of like a boxing match, if somebody fades late in the fight, they lose the fight, right? And so I feel like we're in the latter stages of this fight now. And that does not mean the fight's over. So you have to be prepared at all times and not get tired in this situation. This is a market that fatigues a lot of people. When you go through these bear cycles, it fatigues a lot of people. They start getting fatigued, and like a boxer starts dropping their hands and their punches get sloppy. You don't want to be that person, okay? You got to stay with it. You got to stay on up and up. Here's the situation. Basically, for the past 18 months, for a lot of folks, they felt stocks falling, right? And the spec stocks were first. I'm struggling today, man. I'm struggling. Spec stocks were first, then obviously the growth stocks and things like that. And so in this sort of market, folks have been feeling pain for a long time. And then if you've been in big tech, you've been feeling pain for 8+ months now, right? because basically November, all the big tech peaked out. If you're in crypto at all, Bitcoin, Ethereum, things like that, you've been feeling pain for about a year now. So yeah, we're in the latter stages of this fight, but this fight is not over. Let's be very, very clear about that. We are not, they haven't rung the bell yet. And I don't know when the bell will be rung, but it could be a few more months from now. It could be 3 months, 6 months, 9 months. We'll see. But what we do know is these cycles, they last a while. And so, you can't fatigue now. Let's just put it that way, because I see definitely some folks just fatiguing, and, that last group of people just like, I'm just ready to give up, right? The NASDAQ's down over 30% from its highs. As of last week, at one point, it was down almost 34% from its highs. And so, when you're in this sort of market, man, you very rarely ever get these sorts of markets, and you can't fatigue. You can't fatigue in this market. And one of the best things I would say is don't get your hopes up. And I highlight this JP Morgan thing because you're going to see more things like that coming in the future. And I just think it's best to not get your hopes up about, the market's going to bounce back this week or bounce back next month, because the thing is, like, everybody is so hopeful of these things and they just don't come. And, a lot of folks want to have these relief rallies and things like that. But this market has been no relief. We haven't had relief in this market for a long time. And don't even get your hopes up that there is going to be relief. You just have to be ready for the pain. You have to be ready for a long-lasting situation here. And, don't get fatigued in this market. That's the best thing I'll say. Don't get fatigued in this market. Be prepared for whatever. If this market just downtrends or doesn't do anything for the rest of this year, just be mentally prepared for that. Don't get your hopes up. Don't get your hopes up in this sort of market, guys. So anyways, much love as always. Hope you enjoyed this. And that's about it. Have a great day. Leave me a comment. I'll respond to all comments in the first 30 minutes. First 30 minutes, I'm responding to all comments. Peace.